You're standing in a pharmacy in Toronto, holding a bottle of insulin. It costs you $40. You drive 3 hours south, cross the border into Michigan, walk into a CVS, and pick up the exact same bottle. Same company, same formula, same milligrams. The price? $320. Nothing changed except the imaginary line you crossed. This isn't about insulin. It's about everything. Your phone bill, your internet, your flights, your groceries. Americans pay more for almost everything than people in countries with similar economies. And it's not because things cost more to make here. It's because of something much weirder. Let's start with phone bills, because they're small enough to feel annoying, but big enough to actually matter. The average American pays about $70 a month for wireless service. In France, $25. In the UK, $18. These aren't poor countries with bad networks. They have faster speeds, better coverage, and more data than most US plans. So what's happening? Here's the uncomfortable part. You're not paying for the service. You're paying for the lack of competition. In most developed countries, there are 7, 10, sometimes 15 wireless carriers fighting for customers. In America, there are 3: T-Mobile, Verizon, AT&T. Together, they control 98% of the market. And that's not an accident. That's a design. When a market has 3 players instead of 10, those 3 players stop competing on price. They compete on commercials, on celebrity endorsements, on which one can convince you their overpriced plan is somehow a deal. And it works. Because what are you going to do? Switch to the other expensive company? This pattern, this 3-company stranglehold, shows up everywhere in America. Airlines, internet providers, health insurers, pharmacies, even eyeglasses. The same structure, the same result. Higher prices for you. But why does America keep ending up here? The answer is something called consolidation. And it's been happening quietly for 40 years. Here's how it works. In the 1980s, the US government decided that big companies weren't actually bad for consumers. The idea was that bigger companies could be more efficient, offer better products, and pass savings on to customers. It sounded reasonable. It was called the Chicago School of Antitrust Law, and it completely changed the rules. Before this shift, regulators would block mergers if they reduced competition. After, they only stepped in if they could prove a merger would directly raise prices. And proving that in advance is almost impossible. So companies started merging, and merging, and merging. In 1983, there were 50 major media companies in America. Today, there are 5. In the 90s, there were dozens of airlines. Now, 4 carriers control 80% of domestic flights. Hospitals, pharmacies, insurance companies, same story. Every time 2 companies merge, they tell the government the same thing. This will make us more efficient and will pass the savings on to customers. And every time, the opposite happens. Because here's the thing about efficiency. When a company gets more efficient, it has 2 choices: lower prices to attract more customers, or keep prices the same and pocket the difference. In a competitive market, they have to lower prices, because if they don't, someone else will. But in a market with 3 players, there's nowhere for the customer to go. So they pocket it. Let's go back to wireless for a second. When T-Mobile and Sprint merged in 2020, They promised it would lower prices and improve service. The Department of Justice approved it. Want to know what happened next? Prices went up. Verizon and AT&T raised their rates within months. T-Mobile followed. Because that's what happens when your competitors disappear. You don't have to be cheaper anymore. You just have to be less annoying than the other two guys. And it's not just telecom, it's everything. Let's talk about a bag of Doritos. In 2000, a standard bag of Doritos weighed 14 ounces. Today, it weighs 9.25. The price? Roughly the same. Adjusted for inflation, you're paying about 30% more per ounce than you were 2 decades ago. This isn't Doritos being greedy. It's Frito-Lay responding to the market they operate in. And Frito-Lay is owned by PepsiCo, which along with Coca-Cola controls almost 70% of the US beverage market. When you're that big, you don't compete on price. You compete on shelf space. Same thing happens with toothpaste. Crest and Colgate own about 75% of the market. They don't undercut each other. They introduce new flavors and new packaging and charge you the same amount for less product. Here's the math regulators missed. When industries consolidate, prices don't spike overnight. They creep. 5% here, 10% there. Shrinkflation, fees, subscriptions that used to be one-time purchases. It's slow enough that you don't notice it year to year. But over a decade, it's massive. And because the same thing is happening across multiple industries at once, your entire cost of living quietly climbs while your salary stays flat. Between 2000 and 2020, the median household income in the US went up about 31%. Sounds good, right? Except healthcare costs went up 117%. Childcare went up 130%. Housing went up 190%. You got a raise. Everything else got a bigger one. Europe has stricter antitrust enforcement. When two major companies try to merge, regulators actually say no. In 2019, the European Union blocked a proposed merger between two big mobile carriers in the UK because it would have reduced the number of competitors from 4 to 3. In America, we went from 4 to 3 and called it progress. The result is visible in your bills. The average American pays $110 a month for home internet. In South Korea, the fastest internet in the world costs about $30. In Romania, you can get gigabit fiber for $12. It's not because labor is cheaper there. Romanian internet technicians aren't making poverty wages. It's because there are 40 internet providers in Bucharest. If one tries to charge you $50, you switch to one of the 39 others. American companies will tell you the reason things cost more here is because of higher wages, stricter regulations, or bigger infrastructure costs. And sometimes that's true, but not usually. Take prescription drugs. A bottle of Humira, a common arthritis medication, costs $77,000 a year in the US. In the UK, it's about $12,000. Same drug, same company. The difference isn't manufacturing cost. It's that the UK government negotiates prices on behalf of all its citizens. In the US, that's illegal. Medicare, the largest healthcare purchaser in the country, is banned by law from negotiating drug prices. Who benefits from that law? Not you. Here's the uncomfortable part. A lot of this isn't shadowy backroom corruption. It's just lobbying, legal lobbying. In 2022, the pharmaceutical industry spent $374 million lobbying Congress. Telecom companies spent another 150 million. Insurance companies, 230 million. That's not buying votes directly. It's buying access. It's funding think tanks that publish reports explaining why consolidation is actually good. It's hiring former regulators to work for the companies they used to regulate. It's making sure that when a bill comes up that might increase competition, the people writing it have heard every reason why that's a bad idea. And it works. So what happens if this just keeps going? Right now, 4 companies control 85% of U.S. beef processing. 3 companies control 70% of pesticides. 2 companies control almost 90% of the beer market. This isn't hypothetical consolidation. This is now. And every time a market gets more concentrated, a few things happen. Prices go up, quality goes down, innovation slows. Because why innovate when you don't have to compete? Look at internet speeds. The US ranks somewhere between 20th and 30th in the world depending on the year. We invented the internet. We should be first. But there's no incentive for Comcast or Verizon to spend billions upgrading infrastructure when most of their customers have 1, maybe 2 choices for service. In cities with municipal broadband, where the local government offers internet as a public utility, speeds are faster and prices are half what private companies charge. But in 19 states, lobbying from telecom companies has made municipal broadband illegal. You are being charged more for worse service, and the companies doing it have made it illegal for your city to offer you a better option. This is the stakes. Not that you're overpaying for phone service, but that the entire structure of the American economy is quietly shifting toward less competition, higher costs, and fewer choices. And most people don't notice because it happens $5 at a time. Here's the thing. Regulators keep getting wrong. They think monopolies are bad because they raise prices. And they do. But the bigger problem is what monopolies do to possibility. When an industry has 2 or 3 giants, new companies can't break in. The barriers are too high. The existing players have too much control over supply chains, distribution, shelf space, contracts. So the market freezes. You get the same products from the same companies at slowly increasing prices forever. Innovation doesn't die. It just becomes illegal or impossible. 40 years ago, American antitrust policy changed based on a theory that big companies would compete so hard they'd have to lower prices to survive. It didn't happen. The companies got big, stopped competing, and raised prices instead. So here's the question no one wants to answer. If the theory was wrong, why are we still following it? You're not imagining it. Things do cost more here. Your phone bill is higher. Your flights are more expensive. Your groceries cost more per ounce than they did a decade ago. And it's not because you're bad with money. It's because the market you're shopping in was designed to extract as much from you as possible while giving you as few alternatives as it can get away with. The next time someone tells you that capitalism means competition, ask them how many choices you actually have. This is how money feels. If this changed how you see your bills, share it with someone who's tired of paying more for less. And if you want to understand the systems that shape your wallet, subscribe, because this is just the beginning.